It's a crypto sniper. Yes, we're coming back at you after a lengthy waiting to see what would be, and we were 180 degrees wrong. That's right, we were wrong on crypto this time. A key change and inflection point, and it's the first time in quite a while, but we've been inaccurate here. It's broken to the upside, and it's been super tricky, and there's a number of reasons why it's tricky. We're living in an inflationary environment that is runaway. That means most asset classes, even when weakish, should be moving to the upside, So there is an inherent asset class inflation. We're seeing tech re-inflate a little bit. We're seeing a number of things re-inflate. And that is because of the runaway inflation. We have to talk a little bit traditional markets to talk crypto. You have our friend, Jay Powell. He has said he will deal with price stability. That runaway train that he was supposed to be on the platform that has steamed away at 70 miles an hour, he's decided to have a slow amble on the railway tracks afterwards in the bid to catch up and jump on that train. Well, I'm afraid he's not going to get there because the speed of the train is far faster. You're at just about 8%. In actual fact, that's government stats. You're closer to 16%. I'm not changing this message. It's the same on the Market Sniper. You'll hear it regularly. And he raised 0.25 to go to 0.5. That is literally taking a couple of steps on a runaway train, after a runaway train. You ain't going to catch it doing that. That means we have permanent, lengthy levels of disproportionately high inflation environment and negative real interest rates, because the interest rates that you get on your debt is much, much lower. Anyway, why is that relevant for crypto? Because just standing still means you have to go up. So that has given a little bit of buoyancy to most asset classes despite a fairly bearish set of circumstances. We have been sitting in an expectation of a deflationary event. That's how they'll get people to buy debt again. At the moment, nobody wants it. And why would you? It's guaranteed losses. So this structure had flat, it was cranky, it was really zippity doodah, quite volatile, and it got more volatile as it went in. Normally you would back that for continuation to the downside for bearishness, and we've been wrong. So it's moved up, and Bitcoin has tackled the 47.5 level, which is a very, very key and interesting level. So we'll show that to you as well. But the big question remains, how long will it stay that way? What am I going to show you? Probably the last little bit that I'll do of a traditional market's nature, and that is the fact that move, you see that orange line, move, that is volatility on the debt markets. The debt markets, wow, you think, what the hell, who cares? We're crypto, who cares about the debt markets? You need to care because they're going to sting you if you don't. These are ever trending upwards. Let's do this in red so that you can see it. Go for it, go, try again, there we go. Give me this one. Thank you so much. Up, 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 down, up, down, whoop, down, and then snapping back up. That's what's happening on the volatility in the debt markets. The debt markets are unraveling, my friends. They are going wrong. This is a debt-based financial system. You say, sweet, the end of the debt system's good for crypto. Yes, long run, potentially. However, in the meantime, what it'll also mean is fear. Fear. Once it spreads, the contagion of the debt market spreads, and it should have spread by now in my opinion, but it hasn't. They'll get to determine when it spreads, and then suddenly you will get fear. Fear means panic and the run for liquidity. Liquidity gets sold, lots of positions get closed, hedge funds go bust, all sorts of drama starts happening because we are in uncharted territory on interest rates after a sustained period of devaluation. In the meantime, the equity, which is the VIX, which is equity, has actually been coming down. It has been correcting to the downside. So equity markets, again, not crypto, but related. Remember, Nasdaq is kind of like tech equity, and a lot of the alt market is being treated in much the same way. As you all learned, macro matters because Bitcoin got stomped on in spite of a number of potential upside reasons, extending of cycle, etc., etc. Bitcoin got stomped on. Why? Because the macro was frail. Macro was frail, and it's going to get frail again. There's going to be more events that will occur. And initially when there's fear and things are going bust, and going wrong, people rush to liquidity and people have to fill holes that they've made losses. That, when I say people, it's normally institutions, hedge funds, and all these others, and banks, all our best friends, as you can well imagine. So this is pointing to big problem in debt markets, but for now, equity don't care. Talk to the hand. I don't care. I don't care. It's got nothing to do with me. And in the same way, crypto is rallying on this as well. One of the reasons that that's been allowed to happen is because of this high negative real interest rates. In other words, inflation being much higher than what your money earns in the bank in terms of the debt markets or in a bond instrument, which is very much like a deposit if you want to think of it as an investor. Okay, so that is the end of the technical jargon for bond markets for those of you in crypto. And as a result, this fear is not affecting Bitcoin so far. Let's have a look at the key levels and we'll talk to you about which one looks super duper as well. So we know we have a key level of 47.5. This is so many lines. Nice squeezing up, rising wedge with a pop out the top to that 47.5, just run and pull back. We also made an interim level of our upside HVF. It's now an upside HVF because it's clearly broken that way. But it is kind of making good progress. It's at second interim, not too bad. It's got a target of 51,460, so you're going to run through the 51 at some point, potentially on balance of probabilities, if it is sustained, and we don't get that major shock, deflation, hack, whatever event that may occur that will cause problems. But yields are going up on the debt markets, and that makes debt harder to repay. There will be knock-on effects for that, for leverage and many other aspects. So that's Bitcoin. 47.5. Why was 47.5 significant for us? Well, we go back to the legacy. First head and shoulder over here. Lots of annotations here. Crazy. Lots of history drawing and analyzing Bitcoin. This fella was your head and shoulder, and that was such a key level that ran all the way through, and you're just running it now. You are just running it back again now. So what do we see? Let's clean the face a little bit and also put the eye back on. What do we see as the current framing technically for this? Well, now it looks like for as long as equity markets, which are smaller than debt markets, and crypto markets that are smaller than the total market cap of equity markets, are going to ignore and shrug off or benefit from the negative real inflation of the failing debt markets, as long as that lasts. Bear in mind, you're walking around where there is a potential piano that could fall on your head at some point. That doesn't mean it has to happen, but at some point this collapse will come into view. And I would say it almost invariably has to happen, but it's not an answer as to when it happens. It will happen when it all comes into focus and when something goes wrong. So we who do the splitters and through that would say that's probably your channel. You've got a sustained period then where this turned out to be support. There was a lot of volume traded along the low side when we did the volume by price analysis. That will point to this level again, proving a very stable and strong support because it got tested there. It got tested. We do it in a different color and maybe fatten it up a little bit. You can see how that level sure got tested. Let's maybe undo it and make it a little bit higher. It got tested properly. And you never really ran it. In fact, it dipped deeper in our falling wedge when we were correct on that one, calling it up. And as we were there, also calling it up. So when we've been bullish, we've been right. Ooh, maybe we're too bearish. Who knows? Sometimes things go down, though. Be careful. The natural macro environment now, we see a drift up. So can you go up to the splitter, have a little rest, pull back then? Possibly. Where's the trade? Where's the trade? I hear you clamber. Where is the trade? Well, let's have a look at the totals and have a bit of a better look and a read on that. So we'll clear the face and we'll pop over to our total market caps. So total generally, that's got everything including Bitcoin in it. This is how we're looking. Again, you're going to see the same thing, and I'm going to warn you that technically this isn't the most safe or easy to call environment. So we're not getting the first cup gold nugget, what we considered our best opportunity to be leveraged long and be aggressive. What you're getting now is a grinding up process that I think at some point will melt up. Remember, we've always been macro bulls. We just felt that over here there was a risk that you dip a little lower. So yeah, it didn't happen on the low side. You didn't get an extra bargain basement hunting, and that is thanks to runaway inflation and the Fed's inactivity in that space. So in short, even those assets that we consider risk assets, which could be tech stocks, cryptos, are getting a bid now because of the devaluation of money. All caused by central banks, by the way. Let's just reiterate. It's not caused by Biden. It's not caused by Trump. It's not caused by supply chain issues. It's not caused by Putin invading Ukraine. That's all the things they're going to tell you caused it. I'm here to tell you it is the proliferation of fiat. And when they first started doing it in QE in 2009-10, you got an asset price inflation, which is the reason why your equity markets are so hopelessly overvalued. Let's show you a chart on that as well. While we've been talking cross asset, let's just show you that. We got to wipe the face again. I want to just show you this particular chart on equity valuations. Here he blows. I'm not sure I've done this. I've done this inside my community members. This is GDP and market cap to GDP. That is the year 2000. The most ridiculous market cap valuation. .com boom, peak. Guess what? You are 25% higher relative to the year 2000 today. 2007, that was the subprime crisis high. How high was your market cap? You are 60% higher than that relative high. This is a mean, and that mean incorporates a lot of the modern era, the financialization of everything, the Greenspan era that started in 87, that saw this huge financialization of everything, cheap debt, the globalization, which is now being deglobalized according to Larry Fink, which is going to be highly inflationary. Guess what? Highly inflationary long run is very good for crypto. So we should celebrate that. But the shock of this readjusting and having some form of a crash at some point will also be very, very damaging. And there'll be a panic and a run for money. And then we've got the World Economic Forum that's virtually assuring us that there's a Russian hack on the way, or maybe a North Korean one. They haven't made up their mind of who the baddie is for the month, but that could be coming as well. These valuations, guys, point to the distinct possibility of some nasty turbulence, despite inflation being very, very good for equities and our favorite asset class, the cryptos. This is how fast the rates have started to bounce up on the 2-year Treasury yield like that. And in percentage change, this is so sensitive. The more heavily indebted you get and the closer you get to zero, if you go from 0.1 to 0.2, you've actually gone up 100%. The sensitivity to those that get to borrow like that, and you don't borrow like that, but the institutions do. They get cheap debt, and suddenly their debt can double and go up quite substantially when there are these changes. Some people are saying there will be 8 hikes in the rates. Well, I think a lot will have gone wrong long before 8 hikes take place. So that's just a little quick crash burner program course on why you can't ignore macro. You can't ignore macro. Overall, though, back to our draw, most of these, the total and Bitcoin itself, are kind of like this. This is my take for them, a couple of our favorite key moments. You can remember we always have a splitter in all our aspects, so that will run a little bit further because we've got a bottoming going on. I think you have a chance to get to at least the midpoint before possibly a pullback. We'll talk about some pattern structures as well, such as this that I'm drawing, different color. Let's go with a blue. So now we've clearly said, okay, we're turning up. I'm not a mad fan for that structure that we had. So that's like a complex W bottom. That's back up to a neckline over there. So that gives you a projection around about there. Wouldn't it be fine for it to meet round about at the splitter somewhere over there? And that would mean a higher prices. So overall, we have to look at what the market's doing and say, the market's moving up. So as we were detailing here, this would give you a target in and around the splitter over there. So it seems like we're going up in a bit of a sleeve with higher highs and higher lows for now. Marginally, but there is an upward tilt in it. I think the macro environment with the inflationary forces is leading to that upward tilt. So in a normal market where potentially these inflationary forces didn't exist, you might get a more traditional technical analysis structure that could even be more flag-like, which would have been a lot more helpful for us because you would have got some mild correction. But because of the weakness that is in generally the currency system, because of the hyperinflationary in the debt market, this is being pushed up to be potentially something a little harder to recognize as normal continuation, but resumption could be very, very powerful. So we're getting essentially the squashed upwards flag for which you are in potentially right now a very big macro channel that is flagging at the moment. If that were to occur, maybe you'd get a small reaction back at our splitter and you could actually go up to another high. But as everybody starts getting super bullish, you could have one more correction down, maybe to the splitter. Just a couple of possible scenarios, not very speculative suggestions on my own behalf about what might be possible in terms of the price behavior here that you could encounter. So what else do we want to talk about? Well, we want to talk about, that was total. Let's have a look at the alts excluding. And do you get a great difference? And the answer is really not really. You're getting a similar type structure, which I would imagine will lead to a key inflection point, which is something we do in the Market Sniper. You can find out about key inflection points by hitting www.themarketsniper.com. Go and visit the site. Lots of information in there and opportunity to book a call as well to have a chat to one of our consultants with regards to coming on board and learning how to trade with HVF method. So again, very similar, and also to a degree that W, again, potentially getting you to the upper side. So it's going to be a benign, friendly, broadly upward drift market, it seems, for crypto until macro intervenes, which we've already discussed at some length. And I know many crypto fans just don't really care, don't want to know about bond markets and all of these things. Let's just take off the eye and see how we've drawn it, pretty much as I've just done. Is that a log scale? Yes, it is. You make it a regular scale and it's slightly more of a channel, a traditional channel that is heading up. So what's interesting? Well, Hex, having been a sell at 22 up top here, has bounced and found support. So everything is getting a little bit of support, including the hexagons. So they'll be happy about that. The one I wanted to talk about was Ethereum. Ethereum is interesting right now. Ethereum is interesting. So, by the way, the deeper you go down the risk curve, yes, you will potentially get higher, faster movers. But remember this, I would not risk up too deep, personally, in terms of chasing down the risk curve to every little minor shitcoin that is out there. I would suggest you stay in the quality areas, and in actual fact, with this additional risk of things potentially could explode any minute, hacks, whatever the case may be, you want to probably, of that risk you go in, don't whale in. If you are already in, you're in. But Bitcoin and Ethereum are not bad starting points. Ethereum up 3% today. XRP is one we've highlighted as well before. Still got a bit to do before it's ready, but also done okay. Solana finally getting some recovery on. Cardano's had a great week and is 2% up. But I think generally Ethereum will give you a decent overall. So why do we say that? Why Ethereum? So let's pop on down to the Ethereum dominance chart. This is our macro view that we've had a lot of the time. And Ethereum, of course, has been in this congestion phase over here with a broadening structure in and around the 20% over there. So this is it thrashing around. This is ETH dominance. So remember, its biggest measurement that it's been held against is Bitcoin. And it stayed in this broadening structure, chopping and chopping. We had hoped that it might have got a little bit of a break over there. Around about that time it started to go, got up to here, and then it fizzled. The big macro intervened, slam, down she came. But there's been key support all the way along here. So what's happening that there's this mess that you can't make much out of? Well, first of all, just note the key levels. That was the first inverted head and shoulder that performed. We'd actually given that 18.91. We'd said ETH will make 19%. It did a stop, start, and go there. I remember a few people getting impatient with me. Where's your ETH? They said when it did that. Well, it came in the end. And then that's your target. We also suggested that it would probably meet the key level of significance of 20% in an overshoot, which it also did. So this Ethereum is 20% dominance. Now, let's take this off. This is wacky stories, but imagine if that macro left shoulder in red with that huge head and that macro right shoulder went all the way to 34% and Ethereum became a bit of a whale in the platforms. It's already the whale of the platforms, but is it possible it could make 34.34% dominance if proof of stake finally gets going? He's very definitely part of the control structure, is our friend Vitalik, wanting all property in the grid as well so that you can be max extracted against in the property realm. By the way, on that point, don't forget our Odyssey channel. You can go and see our latest about why inflation is their key weapon and how through property they will be, yes, they will be spoiling this man's dreams. Stop legalized plunder, he says. For every 3 years I pay property taxes equivalent to the original cost of my home. It takes 50% of my social security. You can go and watch that on our Odyssey channel. You'll need some LBC tokens for it. Anyway, let's have a look at that little smaller structure over there that was happening and talk about it. So why is it looking positive for ETH? We think this structure is going to continue to move to the upside now that Bitcoin and crypto has shown its hand and that it's an upside. Nice rounded basing. We can see this heading to 19.7%. So that would mean measured against all the other alts and Bitcoin. Now remember, the biggest piece of that is in fact the Bitcoin. It's about 43% odd. So it's the biggest component, but even measured against the other, ETH is 20%, the other 40%, which is all other tokens, apart from Bitcoin. So it's in and around 20, Bitcoin's in and around 43. So you're looking around 63, the other 37%. Ethereum is still going to gain ground. So yes, there'll be tokens that'll go faster. It's much easier to pump smaller cap tokens than one that is 406 billion big. Even Binance, which is next up, is 72. That is some way smaller than 400. However, the safety, and if you suddenly got a smack, Bitcoin and Ethereum would go down more, less hard, my apologies, not more, less so in the events of adverse, sudden events. And I can't tell you when these are going to occur, guys, but they are going to occur. You're not going to get away with interest rate tightening cycle on an ongoing basis in a debt market like this. I'm afraid the debt system is going to come to a head far sooner because the sensitivity, as I've already mentioned, as you go deeper into debt and lower interest rates, smaller rises have much bigger knock-on effects. We aren't going to make it. So at some point, the piano falls. And at that point, certainly initially, fear, liquidity chasers, failing hedge funds, banks, countries, etc., currency runs, everything starts to take over. The uncertainty will be detrimental in the initial instance. Long-term macro, crypto has always been a bull in our books. Long-term macro inflation will be very supportive for it because we'll go back to stimulus and crypto will pump even more. And in that structure that we gave, that was the bear flag, only that wasn't, with the upside leaning, the next stimulus will give you the next super surge to the upside. And you are somewhere here in that Bitcoin or that total squeeze where we are grinding with a slight essence to the upside, thanks to the support of the inflationary forces up along the bottom. But at some point, when we have a bit of a knockdown, we'll have a down leg, and then potentially, when they come back with stimulus, we'll have our next super surge. So that's my framing for crypto after seeing what it's done and accepting that we were indeed wrong on that. and that it has invalidated levels that could have been valid ones for the downside. It is an upside. We're invariably a little later to the party than many of the others. I'm okay with that. I didn't want to have the first slice of that pie. A couple of quick tokens we can run by that are doing fairly well. You can see if you're watching on the lower time frames, you get a number of technical setups that are occurring. I wouldn't chase into the slightly more choppiness now. There's a genuine potential, a bit of a greed fest going on. There will be pullbacks along the way, and I wouldn't say it's going to be absolute runaway train. But if you're in it and you're biased, you're sized sensibly, you're not going in on the leverage, you're blue pot in, you're going to be doing probably on the whole just fine, providing you don't jump in at exactly the wrong moment. Limit orders are your friend. Limit orders are your friend. So that's Sol that's been in a position of recovering. I want to highlight how hard a time it was for Sol. If we just go back up to the daily, I may even need to squeeze 3 days in. We'll see how quickly that will work. There we go, finally. You can see this was the perfect sell of that upside HVF, too perfect, 260, and I highlighted this to the community, $75 from 260. That is a heck of a downside valuation. You're talking about 65 going on 70% downside devaluation. So in a way, that was a mini bear market. I wouldn't even say a mini bear market. In percentage falls, it's huge in crypto, but it came quite quick and sudden. A lot of it driven through the macro events. Now an extended flat, you're broken. Is this, and this is the question many will ask, is this just a rally before further downside? Is this just a rally before further downside? So you've got this little rally. Be careful, be careful. As I say, we are not wild bulls here. Many people just want to binarize you. You're a bull or you're a bear. No, I'm cautious. We're generally cautious here. We don't think you're going to get away without some form of adverse event striking us on the macro levels. It doesn't matter what happens in crypto. You don't need a hack to happen in crypto that could bring a very strong selling, new wave of selling force. Now, I'm not predicting that that's about to happen right now. You could get up a whole bunch higher, and it could be a bit smaller, the effect. You could get up here, and then you could, you could have a pullback, and it might not be too fatal. But it could be brought on news. Or you could have the mother of corrections. Equities are hopelessly overvalued. Then there's the favorite draw that you all know me for, one of my most favored Bitcoin and crypto analyses that I do, and that is the likes of total 2 divided by the NDX. So we're going to show you this. There's the total 2 with a W, getting a little bit of a selling wick, maybe going to be sucked back down to that neckline in a bit. Nasdaq, let's see how she goes. So this was the squeezy Japanesey. We did notice that, and I did draw that a while ago. Let's show you also that on the bigger time frame and also buy a bit more space. So this still is one of my favorite structures, but there is still room for you to have. You could do a selling leg and go lower, and this could still be valid. You could have that as your first low, and you could still have a higher low. Could still happen. It doesn't have to happen right away. Could happen higher up. But at the moment, this is starting to look like that's a relative low. You squeeze nicely, you're going up. What's happening? Crypto is going up faster than the Nasdaq. And this was always our second scenario. Our second most favorite scenario, which says you will just shake your head and then you will go on up, which will give you round about a nice move up to there, and then we break. This could be the one that works best for us. Why? Because unlike the other one that has got a channel on a pole, we've got our splitter in there, you've got a major channel, and then we're hoping for that. Unlike that, we actually have a valid higher high here and a lower low, and there is actually a volatility constriction. So this could go up and over and back down, and this could be our idealized setup. And that will see crypto do exceedingly well against tech and become the dominant forefront. And this probably moved into first place for my favorite scenario. The problem you have is there's no dollar prices on this. This is in Nasdaq This is in Nasdaq terms. So the values you are getting here when you see them divided by each other are not meaningful in any particular way. So this is, as I say, number one for now, but don't forget, if you get a nasty smash down, you could still make a lower low over here without invalidating this. And you could indeed make an entirely lower low in a very depressional, if all the bank balances of the world were zeroized by a World Economic Forum hack, then let's be honest, everybody's going to liquidate their crypto for whatever money they can get to get food. So it all depends how extreme. How far do we go down the road to considering scenarios such as zombie apocalypse? Well, in my TG Pink and my Psycho Bunny, who knows? Who truly knows? Who truly knows? But you've got to bear in mind that there are percentage odds of them all, and you can't rule any of them out. But for now, the predominant framing for future tech would be to continue to see crypto outperform the Nasdaq, and that those on the inflationary side will continue to broadly go up for now. But this will be a slower one. It's not going to be, that was quite strong, that was super strong. I think it's going to be worked up. It's going to be lower volatility and relatively chilled. You know what? That suits me just fine. And let's hope the debt crash and all that could go on, all the possible failures of businesses with the rising interest rate cycle potentially being implied, doesn't come too soon, because that will spoil your party. Okay. If you've enjoyed this, please give us a share, give us a like, hit the puppy licks button. We're always doing our best. We were wrong about Bitcoin this time, and we will own that. But generally on the turns, we've been pretty good with regards to crypto markets, and we're worth the follow. If you want to check in with us, www.themarketsniper.com, and you can book a call, have a chat, and have a look at how we have been taking it forward. Wow, killing it on the traditional markets as well. Aussie, JPY, a totally indebted currency such as the Japanese, with terrible demographics, with everyone getting older, all in a commodity bull cycle due to an inflationary environment. The Bitcoin JPY could be doing very, very well in the not too distant future. Don't forget to have a look at these other currencies. Some are even worse than the dollar. Yes, believe it or not, that does happen. Thanks for watching. We'll catch you next time, and play safe. Be careful with that leverage, and bear in mind, these are strange times indeed.